The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have a guest on at the half hour, Greg Fisher from Median Line Study. He has done some work on the work of Alan Andrews and Robert Babson that I think you'll enjoy listening to. We have a new moon today coming in tonight, New York time. And remember, a new moon is one of those things that Tom Pilk worked on in London, and it's usually a good buy on the new moon in stocks, and we're coming down hard near some really good support here, folks. So unless we totally give up the ghost today, we should have some type of a bounce, I would think. Now, you've noticed here in the DAX that I posted this morning that we've had a pretty good gap down from the 78% level, but we've held right at the 61% retracement so far. One of the things we looked at last week, of course, was the weakness that we were seeing in the Dow Jones, the fact that the rallies were getting weaker and weaker. I wanted to post those here this morning so you can take a look at it, because we're right at major support here, folks, this morning as we come in. If we get much below that 20,350 level, you're going to be looking at, you could be looking at a really bad day today in the market, getting all the way down to the 202.50. That would be another 150 points from where it is right now. That would make this probably the largest break we've had in several years, if that's the case. But we are at some pretty good support here. But the ABCD structure on this takes you down to the 20,280. I think that magnet might be there, Mr. P. They're talking about the magnet of the Dow Jones. We'll take a quick look here at the daily on the Dow Jones, because this is one of the things we've been looking at over the past few weeks because of these gaps, and we'd like to take a look at it again this morning. You notice that we do have this gap. The third gap is at 20,270. That's the number that we were talking about just a while ago. Now, if we fill that, that means we filled all the gaps within a 3-week time period, which would be quite unusual. But that usually would mean we're getting ready to, to see a pretty good rally in this stuff. We haven't had this is one of our biggest, strongest corrections. We went from August through November and made a 61% retracement, but this is the first dollar amount correction that we've had that has been any significant at all. We felt all along that these gaps would be filled in the Dow Jones, and so far, they're heading down towards them. The last one is at that 20,200 level, so watch that very, very close, in my opinion. Now, we're also, if you remember, we were talking about the U.S. dollar index and how it was acting, very, very bearish. And as you can see here today, we have a lot of strength in the pound. We have a lot of strength in the euro, and we're breaking down again in the U.S. dollar index. We're going to be pretty close to this 97.50 level very, very shortly if the market continues to accelerate to the downside. Now, the euro is making a big move here today, folks. We're up over 100 pips, right at 100 pips. And you'll notice that we're completing some really strong, right here, this really strong ABCD structure that I'll bring up to let you folks take a look at it, because it's a pretty good acceleration, and the fact that we're coming into a new moon is also pretty good. So we'll look at this thing right here. You'll notice that we can get, we're trading at 109 right now, and the 61% retracement of the high from way back in September comes in at 109.40. So we're within about 40 pips of that. That major thing going of what we're looking at this particular point. Yes, we have to have our hats off to Tom O'Brien anytime he talks about the U.S. dollar, because he was the one who coined the phrase king dollar when it was trading at 73 back in 2011, before it went from 73 to 126. So we pay attention to the man when he raises his voice or raises his hand. Remember, in the land of the blind, the one-eyed man is king. You did a great job, Mr. O'Brien. Congratulations. Okay, let's take a quick look here at a couple other things. The gold market is starting to move to the upside. We're getting almost ready to break out of that level of the 1265. That was the old high. We've been up to 1260 so far this morning. Silver is making a 78% run on it, and platinum is still, very, very meagerly following along at a 382 rally. So those are some of the ones that we're watching here. The other one, of course, folks, is we've got this crude oil. We've been watching it for quite some time now. We're coming down here to test the 47 level one more time. This is going to be real interesting, folks, because this is the third time that we've tested this level, and if we fail it here, this is going to be pretty negative. So, keep in mind that we've been down here. This will be the third time coming down today. We're at 47 and change, and small change at that. So we'll watch this level of 47. And what you ideally, if you're bullish oil, this is what you'd like to see, is you'd like to see it take out those old lows by a penny or two. That would be taking it just below 47, like at 46.95 or something like that, and then not have any selling at that point. That would give you a really good spot to take a look at it. We've had a request here to take a look at the NASDAQ, and we would be happy to do that here. Now, the one thing that this is the NASDAQ as of Friday. I have not put the NASDAQ daily in here as of yet, but as you see here, this is a 60-minute chart going over the last few weeks. This was Friday's action. You see we rallied up to a 61% retracement and then down to a 61% retracement. And then what's happened this morning is we've got all the way down and we made a double bottom at the 53.20 level. That equates to that same chart that we looked at with the Dow Jones E-mini, that it's at support also. So these are some of the others that are lined up that look a little bit interesting, to say the least, on some of these things. So, but they're not all going to be the same, folks, because each of the indices is a little bit different. The one that looks most interesting to me from a technical standpoint today is the Treasury bond, because let me just put this up here and show you what we're watching here in the bonds. We hit 152.03 last night, folks. That was one tick off of the 78% retracement of the whole move from 2017. So that could be a very, very interesting move here, because that equals the same move that we had between December and January of December of last year to January of this year. Every time we move, we rallied 5.5 handles. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart for the Dow for the E-mini S&P, and as you can see, that 2317 is a 61% retracement off of a major low, so sort of keep that on mind. Now we're breaking down now in the crude oil market. This is what we want to see. We'd like to see it get below that 47 level, but not go much below it. So that's what we're keeping an eye on here early this morning. As far as the euro, there should be some pretty strong resistance here in the euro between the 109 level and the 109.40. That's what I think should happen, but whether that's the way it's going to work out or not, no one knows for sure. But it does have some pretty stiff resistance up in that area because that's completing the bigger ABCD pattern that's there, and we're very close to the 61% retracement that comes in at the 109.40 level. So that's what I would be keeping an eye on if I were watching the euro, and I am. So, but there's no reason to sell it up here. You've got to wait for it to prove to itself that it's getting ready to, move down. We've had a pretty good rally. We've been expecting this just by looking at the bearishness in the U.S. dollar. And the U.S. dollar, of course, is 53% weighted by the euro, and so we want to watch out. The other one that looks very interesting, folks, is the British pound. We had one heck of a rally here in the British pound this week, and we're continuing now because we've now gone above the 78% level. We opened sharply higher here Sunday night. And let me get this up here so you'll be able to take a look at it. And we just started to just go higher and higher and higher. So that's it. Now, Russ is asking me a question. Do I expect the E-mini to hold the 2313, 2315 level? We're in the 2317 so far. Yes, I think it's got a chance to hold that. But if it doesn't, and, you get below 2309, that's certainly breaking it down. You'd be looking at another 150 points down in the Dow, Russ, because remember, we've already looked at that Dow ABCD structure takes us to 20,270, and this is a new moon, and it doesn't end until tomorrow, so there might be more negativity on some of this stuff before it does turn, but we don't know exactly when that's going to turn, do we? So I would use the 23.17 as a place to watch it, just like we're watching crude oil here. It could just take it out by just a little bit, as you mentioned here, 23.15, Russ. And then if it holds there, then it's got a pretty good chance. Remember, we've been in a bull market for a very long time. Oh, I don't even know if that posted or not. I hope it did. There we go. Anyway, we'll keep an eye on this as we go through the thing today, and we will be watching it as we go through. So give me 1 second here to update, because my beeper is going off, and that is telling me that something is hitting some major spots, and that is nothing more than hitting that 109 one more time. Okay, the other one, folks, as far as since we're talking about the currencies, we've had one big, huge move here in this yen. It's been absolutely a technical thing of beauty. It just keeps heading lower and lower and lower. We're below the 110 level right now. If you give me a second to put this up, you'll see that it still has price objectives, going a lot lower. It just stays oversold and keeps getting oversold, because every time it rallies 30 or 40 pips, boom, selling comes in and pushes it down quite a bit. Looking at this on a longer term time frame from December to where we are now, there's some pretty strong support down about another 130 points from where we're trading right now. So should we get there, we'd have to take a look at that, because at that point you'd have several ABCD patterns coming together, and you would be at a 382 retracement of that whole move, and that would be an interesting one to watch, because it's still got legs. It's just in the midst of a major correction here, which, it was telling you wanted to do this. If you just looked at that dollar index at 102, it was giving you a tip-off that the euro and the pound and some of these others were getting ready to rally. And that's all it was so far has been a rally, but it's been a good one. And that's how you try to find some of these things. They don't always work, of course not, but when they do, it makes it pretty nice. The one that's got me a little bit concerned here is the fact that the platinum cannot get out of its way today. We've gotten good action in silver, going up to the 78% retracement, and the gold almost at a new high, nearly matching the old high within a couple of bucks. But the platinum is lagging very badly, as is copper. Copper is lagging badly also. So those are the ones that make me wonder if this is really going to be a valid breakout here in the gold. But I wonder about a lot of things in life. We'll just see what's going on here. We'll just see the British pound where we are this morning. This is where we were coming in. We were looking for the market to get up to this 126 level. We've got to 126.09 so far. 126.10 this morning. So we're at some pretty significant levels here in the euro, the pound, not so much in the yen, but in the euro and the pound, they're pretty much spot on. And also in the Australian dollar. With gold as strong as it is, you would think that the Australian dollar would be much, much stronger. But if you look at it, you'll see that the Australian dollar is by far very, very strong. We're in the same range as we were Friday. It's done nothing. And usually the correlation between gold and the Australian dollar is extremely strong. So we want to the other one that's important, we've got our friend Greg Fisher from Median Line Method is going to be here. He wrote his PhD thesis on Alan Andrews' work on the median line, which I certainly like, because they were a derivation of Roger Babson, who was one of the great speculative minds of the 1930s. He called the top in July of 1929 and suffered some of the worst abuse you've ever heard between July and September 3rd, until the market finally topped and rolled over. But he was a vehement bear during that time, and nobody would believe him. And it was interesting. Okay, now I wanted to give you a chart from one of Rich Anderson's clients that does a huge amount of work on seasonalities and stuff, because we're in an area here in the soybeans that looks very interesting. And if we put this chart up, it's a little bit difficult to read because it's small, but it just shows you that the technical nature of the soybean market is not nearly as bearish as one might think. Now, this doesn't mean that it's going to go up, but we are over this strong cycle now with this new moon, and the prices are completing all the patterns here in the the November soybeans, and also in the July. But the November beans look by far to be the most bullish of any of the things of the complex. And whether this is going to be an interesting bottom here or not, I don't know. But the moon is really powerful at picking bottoms in corn, wheat, and soybeans, and also it does a good job in gold. And here we are over a new moon in gold, so we could be just seeing ready for a reaction in gold. We'll wait and see. Stay tuned for Greg Fisher, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we've got Greg Fisher on the line. Greg, are you there?
Yeah, Larry, I'm here.
Well, let me explain something to you. I am not the sharpest knife in the drawer when it comes to technical analysis, and doggone it, you sent me those wonderful charts to put in here, and I can't find them, Greg. I don't know what I did wrong, but if you'd be so kind as to email them to me again. But why don't we start out the show? Why don't you introduce the folks to yourself to them, and if you'll send those off, we'll get those on on the second part of the show. So tell the folks a little bit about yourself.
Okay. Well, my name's Greg Fisher, and as you talked about earlier in the show, about 10 years ago, I came across the Andrews method, and I decided to put it to the test and just see what, if the claims that Andrews made in his original material were true. One of the things that I thought was probably the most fascinating thing was how many times he talked about probability within his course. So I went through, set up a study of his method to determine what the probability of price acting according to what his rules and observations were. So that was, I think it was 2006. I did a study on the grain markets. Why? I guess I grew up on a farm and a ranch, always interested in what direction price was headed for wheat, corn, beans. So I did my study on that. And really, it was really interesting what I came up with. This method has been around a long time, goes clear back to Roger Babson, 100 years ago.
Yeah, and I've got his first chart up here from the Babson chart. Yeah, so we're ready to go anytime you're ready.
Okay. Well, basically, Babson, he was an amazing individual. He was an entrepreneur. He started 3 different colleges. He also authored 47 books, and he actually ran for the United States presidency in 1940. When this guy was into a little bit of everything. He was an engineer. He was trained at MIT in the late 1800s. And in 1904, he founded Babson Statistical Organization. And basically what you're seeing on the screen here is some of his original work. He went through, and this is kind of the beginning of what median lines were. So in the early 1900s, he started doing this work, and he came up with what he called the normal line. And I'll read a couple of quotes here from. He wrote some really neat books, and I've read a couple of them. One of them is actually called Action and Reaction, and one of the quotes from that. He says, "I took the above books with other material to Professor George Swain, the head of civil engineering at MIT, and they concluded there was something in the idea which this normal line would be that led to these Babson charts. They're a little bit different than what median lines ended up being, as they were considering areas of price action on the charts, the highs and lows. They were looking at areas of depression and prosperity up above and below these lines. And this normal line separated these areas. And Babson believed that investors could forecast the length of a depression based on this normal line, and also, an area of prosperity. So that's kind of the history of what median lines were. And most people are aware of Andrews pitchfork. You'll see that in a lot of charting software. And you've got on the screen there just a simple graphic of what median line set or a pitchfork looks like. It's a very simple configuration drawn from a high-low pivot in this case. And then the median line kind of acts like a line of kind of a magnet. It draws price to it. One of the things that I wanted to prove out, and I'll just read off, he had 4 basic rules that he talked about in his course. And he said there's a high probability that price will reach the latest median line. And he also added that should happen about 80% of the time. And then when I first read that, I was astounded by that probability. So that's kind of the beginning of where my studies began. And he also said in rule number 2, price will either reverse on hitting that ML, or it'll also gap through it, and also adding to that, kind of accelerate through that with a large price bar. And he also stated that the probability of that next pivot being at the ML is about 80%. So really, one of those first 2 rules were fascinating to me, and that's kind of what my studies began with.
Now, Greg, what do you do now? Do you have a service for the Andrews lines with different things, or what?
I do not. Actually, I do have a website. You mentioned before, it's medianlinestudy.com. And you can go there and download my original research on the grains for free as a PDF. There's also there's an ebook on there too, also that talks a little bit more detail of things that I've learned, in the last 10 years or so after studying this method.
Mm-hmm. Now, did you ever run into the gentleman that took over from Alan Andrews? His name was Reichert or something like that many years ago. I'm going back 30 years ago. There was a fellow that took over the Andrews median lines and sort of made it semi-famous, but then about 20 years ago, he seemed to just, fade off into the sunset. I can't remember his name offhand, but he was selling, the works of Alan Andrews through his, I can't remember his name. I thought it was Reichert or something like that. But evidently, maybe my gray matter might not.
Right.
I'm pretty sure I'm right about that, but I don't know who it was. But
there's a lot of people that have taken Andrews' methods and added to that body of knowledge, and that's what's really interesting to me about it is it has been around for so long, and if you still see these patterns and these probabilities showing up, what does that really say about the markets? And like I said, there are a lot of people out there that have added a lot of knowledge to this. And one of the things, do you have that wheat chart we could show?
Yes, I put it up right now because we have an interest in wheat as we speak here. Go ahead.
Well, one of the things that I was fascinated by when I did my grain study was how often price does reverse at the median line. And this is just a simple median line drawn from the last 3 pivots. And it looks like we're right at the median line right now. This is new crop Chicago wheat. And in my studies, I found that Chicago wheat tended to have a higher probability of reversal. And we obviously don't know if that's going to happen right now. We may see a reversal or a gap or an acceleration, as Andrew said. But on the chart, it basically shows we are right exactly at the median line at this time. So it's always, now's the time to look, and I think you were talking about that earlier in the show with the grains. It identifies an area and say, hey, I need to start paying attention to what's going on here. And it's not always easy, but, there's Andrew said there's a high probability there will be some sort of pivot at the median line, whether it's a reversal or a gap.
We're going to take a break here, Greg. Stay and we'll be right back, okay? We've got Greg Fisher from Median Line Study.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Andrews and also Roger Babson. Greg, I have a question. I used to, not used to, I still do have a really strong interest in Isaac Newton. And of course, Babson was really into Isaac Newton quite a bit. He bought much of Newton's personal effects when they were available, back in the 30s. But the question did you ever run into the picture of the headboard of Isaac Newton? Because the first time I had seen this was on a postcard, and it was a picture of a Fibonacci spiral, but ever since I've tried to find it, I cannot find that same picture. I just wondered if you ever had an interest in that, or I couldn't find it. I gave up a couple of years ago, but I know he was really involved in it, so who knows.
No, actually, I didn't. I'd never heard about it. Now that you mention it, I think he did. He did bring a lot of. I think he bought Newton's former home, and he brought it over to the States. And he was very much interested in the work of Newton, and the whole action-reaction thing, where all this stuff came from.
Mm-hmm. That's for sure. Now, you've got a chart here of one of our favorite commodities, and that's crude oil. You want to tell us what you're looking at here in the crude?
Yeah. Basically, we're just drawing a simple median line, this daily chart, from a high-low-high configuration. And, about, it was last fall, price came down and touched the median line, and we reversed right off the median line at the P3 pivot. And as you see, price kind of took off. Then we accelerated through what we call the upper median line parallel, which is the line drawn from the P2 pivot. And when that happens, we typically draw a warning line, and you'll see that marked on the chart, a first warning line. Mm-hmm. And it was really fascinating how price marched higher and hit that first warning line and found resistance, which is what we would expect. Andrew said in his course that expect a pivot near a warning line, and in this case it was a reversal pivot. Mm-hmm. And price kind of started dropping off. It came back up and retested that first warning line. Then you see the sell-off that comes back down, and now we're sitting right back on top of that upper median line parallel, which is right in the area of an uptrend line that we're looking at too. But just fascinating price action. Just a good example of price oscillating throughout a median line set. And even though it did drift out of it, we used some of the other tools that Andrew's put in place to find potential areas of support and resistance.
Did he ever use, like I noticed the difference between P2 and P3 and P2 and P4, their standard deviations? Did he ever use standard deviations from the median line as far of a study, or did you use it in your study at all?
No,
to make it look like Keltner bands or Bollinger bands, something like that. That's what they use, and
sure,
it reminds me a little bit of that. So,
right. No, really, what I did in my study, I tried to look at the time frame. Andrews taught his course in the 60s and 70s and into the early 80s, just taking his original concepts. And, back then, as you well know, there were price charts. We didn't have the computers and all that we have now. So I tried to just get into his head and think, how would he have approached, how he came up with this method, how he came up with the probabilities. And a lot of times in his original material, you just see a simple median line, one line drawn. And that's kind of where I started with everything. Try to keep it as absolutely simple as possible.
Okay, well, it's really interesting to see how you do this. I hope that you go forward and maybe do a service on it, because there's not much out there. I mean, there's some programs, like Ninja Trader and a whole bunch of different, and a lot of platforms have the Andrews lines, but not many people are even going into the theory and stuff that he used to go into. But that would be something I think that would be pretty interested, because, it's another pattern is really what you're looking at. So I do enjoy this. Now, how do you handle the crude oil here? Because I noticed it's hanging on this slope of $47 a barrel. Where is it that you would say that the thing doesn't work on crude oil anymore, if you're watching that?
Right. And I don't have it on this exact chart. There's actually another median line that I had drawn that crosses right in the same area. And Andrews called it just an area of confluence, where there's different lines crossing in a certain area on the chart. And that's what really drew my attention, is because it came down, and this particular median line, if you drew it from P0, P1, P4, it is crossing right exactly where we're at now. And, I think oil's selling off a little bit, but we're right in that area to be watching for a pivot. And like I said earlier, you don't always know what that pivot is, and Andrews called pivots reversals, gaps, or accelerations. But like you said earlier in the show, we could, if we drop through, and accelerate downward, we would look for a revisit up to that area, and then more price action to the downside. But if we hold up, we'd definitely look for price to be returning to that first warning line.
Okay, that sounds really interesting. Now, if the folks wanted to get in touch with you, what's the best way that they could get to see the paper and stuff that you wrote, which, by the way, I thought was really done extremely well. It was very easy to read and concise, and for a technician, it was something that was, very, very easy to get into. So how did they reach you, Greg?
Yeah, the best way to go to my website is www.medianlinestudy.com, or Google Median Line Study. There's a tab on there that you can go to. It's Median Line Books, and you can download my original research. It's like, I think, 77-page PDF that you can see, where it gives a little more history of the method, the steps I went through to do the study. And then I go into the results, and also show plenty of charts in there of how I determined the probabilities. So there's also a contact button on there. You can shoot me an email. That'd be the best way.
Okay. Have you done anything like adding any other work to it, to the Andrews, or just standalone, or did you add any moving averages or other systems with it to see what the result would be?
I do. I have done other studies with that, with moving average and slow stochastics and different things like that for identifying or verifying pivots. But I don't really publish anything other than my original study that's out there.
Okay. All right, that's great. Well, listen, I want to thank you for coming on our show today, because this is something that a lot of the folks here at the Tiger Den have had an interest in. And we'll keep you on our list. Maybe if you have something that you'd like to share with us in the future, just drop me an email, and we'll have you back on as a guest again.
I really appreciate it, Larry.
It's my pleasure, Greg, and good luck to you. And it's Greg Fisher, Median Line Study, about the work of Alan Andrews, and of course the fabulous Roger Babson, who was one of my favorite people to study during the 30s. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've gone down to test that 23.17, 23.18 level in the E-mini once again. So that could be the major support here for the day. Usually when the market opens down this much, people are going to be looking to be buyers because that's been the thing to do. And we are down 7 days in a row in the Dow Jones, which in itself makes it an outlier event. I think the last time we saw 7 down days in the Dow was the Great Depression. Was it 1933, 34? Maybe that was that far back. I'm not sure, as I say that tongue-in-cheek. All right, the next question has been asked about the breakout if gold takes out 1265 level. Is that a valid breakout? Well, you'd have to say that it is. I don't think it's going to take it out. That's just my opinion because of the action in silver, in platinum, and also the fact that I'm a sold-out bull. I don't have a position, and I'd like to have a position, but I don't. And that's one of the reasons that you bang your head against the wall sometimes, because I did buy it down there and had my stop a little bit too close, but that's neither here nor there. Okay, that's my main reasoning behind the gold and silver. The dollar index, folks, is at some really critical support here. We're going to break, I'm sure we broke below 99 in the dollar index today. That's getting us very close to that price objective of 97.5. And as we mentioned today, there's a pretty big number up here at this 109 and change level in the euro, and then also at the 120 580 level in the British pound. So keep those in mind, because we do have this new moon today, and that has a very strong probability of putting in highs and lows for various things. I don't know the underlying mechanisms why it works that way, but boy, folks, it's sure got a good track record, for, looking at some of these things. By the way, the one thing to really watch today is to watch the Treasury bonds at 152.04. The high is below 3.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.